In the second quarter of 2023, the Malaysian economy recorded a growth of 2.9%, supported by improving labour market conditions, continued increase in domestic demand, and higher tourism activities. However, the weaker external demand amid the global technology down cycle and lower commodity production weighed down the growth. It also important to note that the moderate annual GDP growth reflected the high base in the second quarter of 2022 from the effect of the economy reopening and policy measure. On seasonal adjusted quarter-on-quarter basis, GDP show a stronger growth momentum of 1.5%, a continued improvement since fourth quarter of 2022. On demand side, growth was supported by both private and public sector expenditure. Private consumption growth was underpinned by firm labour market conditions. Spending expanded moderately across both necessity and discretionary items. Growth in overall investment improved, driven by capital expenditure on structures and machinery and equipment, as well as improved government fixed asset spending. However, during this quarter, net export registered a contraction due to the more challenging global environment. Turning to the supply side, growth is driven mainly by the services and construction sectors. The services sector growth moderated across both consumer and business-related subsectors. Nevertheless, the sector continued to benefit from improving tourism-related spending. In fact, this is one of the bright spots during the quarter. For the construction sector, growth remained supported by continued progress of large infrastructure projects and higher special travel trade activities. Hot weather and plant maintenance had affected commodity production and led to contraction in the agriculture and mining sector. Let me now turn to the balance of payment. For the second quarter of 2023, the Malaysian current account balance recorded a higher surplus of 9.5 billion on 2.1% of GDP, mainly supported by net export of goods. The services account deficit narrowed by 12.0% quarter-on-quarter to RM11.3 billion, reflecting mainly further recovery in inbound tourism. In addition, the primary income account registered a lower deficit, mainly due to higher income generated by Malaysian investing abroad. Meanwhile, secondary income account deficit contracted from RM5.9 billion in the preceding quarter to RM2.8 billion.